Hey everybody, welcome to the weekly wrap up here at Verified Investing. My name is Gareth Soloway, Chief Market Strategist. Now, we're going to get into the nitty gritty. The markets are just about to close for the week, and there are some interesting technical factors at play. So we did see the market pull back today, right? So again, the markets are down. The S&P's down about 0.5%. But more importantly, remember, about a week ago, we broke an upsloping wedge, and that was a bearish sign. It was also in the zone of the cycle. So I gave you guys this cycle that occurred basically late last week into mid this week and said, guys, be aware this is where the markets could start turning direction. And sure enough, we have seen that. Now, it hasn't been a big sell-off yet, but remember, things don't just go straight up and then straight down. There's usually a pivot point where you start to have buyers buying still, but less buyers and more sellers. And it's a slow kind of change of direction that then gains momentum. And that's what we're looking at here today. All right, into the charts we go. SPY is down about 0.46%. But the most important thing to me is this. So here's your wedge pattern. And here was our breakdown, which occurred last Friday, our first close below 1 week ago today. We then had a retrace on Monday where we went to the bottom side of that wedge, what we call in this business a retrace to the scene of the crime. After that, we've been kind of grinding sideways to down, and then today down again. Now, one other thing, I told you guys to watch this a few days ago. I said, this is your line in the sand, this former pivot, right? So if we take a little arrow, I want to show you this. If you go up here, this was the last time we had a significant up with a pullback. Since then, there was really no pullbacks until here. So what does that mean for me as a technical trader? It means that this high now becomes significant. And if we draw a trend line through this, you can see the low of this day kissed it. Today, we are borderline potentially going to close below it. And that is another, what I would call a crack in the glass. I wouldn't say the glass has shattered yet in this market. It is just cracking. And that's the difference maker right here. So let's watch to see in the last couple minutes of trading today where we see the S&P close. Does it close below or on or just above? And again, it is options expiration today. So in the last minute or two, there could be some funky things that go on. And I've seen some really wacky things with options expiration. The NASDAQ. Here's the QQQ, also down about 0.45%. Same sort of deal here. The breakdown last Friday of the upsloping wedge. We've been chopping sideways, but today again down. The only difference here is that if we look at the last major high pivot, it's really a little bit lower. So the NASDAQ has not broken that yet while we're watching to see if the S&P will break today or not. Now, before I get further into the analysis, don't forget, Monday is Investor Empowerment Day here at Verified Investing. It is a day where we will be doing a ton of teaching all throughout the day, live trading throughout the day, basically deep diving throughout the day. It is a day where not only will we be offering incredible sales on the courses that you guys have been begging us for, but also more just really delving into chart analysis. All the traders here will participate. They all have slightly different techniques than myself, and I will talk about techniques I use. They'll talk about it. We're going to be all trading throughout the day as well. So tune in on Monday. It's only going to be available on our homepage after the game plan. So be aware of that and come to the homepage here at verifiedinvesting.com. All right, back to the charts we go. We're inching back down just a little bit with less than a minute to go. Let's flip over to the US dollar. The US dollar, almost no movement today. I showed you guys this new trend line this morning in the game plan. It's a remarkable one. Look at this. High pivot here, low pivot here. So notice this was your high. You came down, you came up, you broke out, and then you came back to rest there before bouncing up and going back up again. And then look at recently, we've come right into that level and again, and each time we're bouncing off of it. So this line appears to be the one to watch in terms of the dollar. Does it hold this line? If it holds this line, I would expect sideways chop inside of this kind of rising or ascending trend line and this descending trend line. If we break below it, watch out below. I think you actually probably come all the way down to 93 on the DXY. By the way, markets have just closed. to me, and again, it looks like we did close below that level. So again, that does bring more vulnerability into the markets. And let's be clear, there's a lot of things out there that are weighing on the market. Now, the market has done a remarkable job of fighting off so many things: tariffs, trade wars, Iran and Israel, Russia, you name it. All these different factors, including a weakening economy, including a Federal Reserve that isn't cutting rates, even though Trump is bashing Jerome Powell left and right. Inflation that the Fed is saying is going to go up. The growth is going to go down, which is stagflation. But again, the question is how many lead weights can be on the shoulder of this market before it finally turns south. And I've talked to you guys about this before. My feeling is that the acceleration to the downside will come when we see a major break in the labor market. So right now we're seeing small little weak signals, like participation rate is lower, which means people are giving up on looking for jobs. But the non-farm payrolls number was still 137,000. So it was still up. Now, granted, we know these numbers are getting revised like 50 to 100,000 every month. But the point being, the market's giving these numbers the benefit of the doubt, whether you believe them or not. So the key is when these numbers really shift into a drop mode, like precipitous drop, I think that's when the stock market gives way, right? It'll be the straw that broke the camel's back, if you will. All right, back to the charts we go. Let's flip into the 10-year yield. The 10-year yield continues to just chop here. Today, slightly lower, the 10-year at 4.38% as of the close. And really, again, one of the things that I'm starting to see, so I have this trend line. I'm going to actually get rid of it now. We're going to do some changing up here of our key trend lines. And this is really just real time with you guys that I'm watching here. So for me, I'm looking kind of right here. This to me looks like a short-term support level on the 10-year, right? From this low to here, and we just touched this yesterday. So this is creating a new wedge where we'll watch. Do we break out or do we break down? If you break down here, you should head right to this level around 4.13 on the 10-year. If you break to the upside, then you're probably heading back to about 4.8%. I don't think that's the likely scenario, though, and I'll tell you why. Yes, inflation is going to be troublesome, but the economy is also going to be weakening. And it's very unlikely, like under no circumstance do I see the Fed raising interest rates. Now, listen, if the U.S. really pushes other countries away like we did on Liberation Day with these pretty high tariffs, will they stop buying our debt, which naturally then would force interest rates up? Yes, there's that possibility. But what do we know about Trump? Trump has shown that when the yields start to spike, he backs off on tariffs. And I would assume he would do the same. And remember, these are borrowing costs for the U.S. We have to refinance something like $7 trillion this year. So, lower rates really would be good. So it's unlikely he will do anything to push the 10-year yield, the long end of the bond yields up. Okay. So again, in general, I would favor lower rates. But the thing is, with so much debt rolling over, it's everyone is hoping like, oh man, could we get interest rates back to like 2%? Not going to happen. Not going to happen. All right. Absolutely not going to happen. And that's going to be problematic. You have a lot of debt that's rolling over that was priced at interest rates at like 1-2% or even less. That's now going to be at like 5%, 6%, in that range. And the amount of interest on this debt is going to be astronomical to what we have been paying for the last 5, 10, 15 years. So it's a big change here, folks. And we just hit 37 trillion in the U.S. debt. So again, things like that definitely need to be paid attention to. All right, let's go to a few charts today. Coinbase, I gave this level this morning. I said this will be your first key resistance level. It was right here at 111.50. We basically came up and kissed it. If you look at the intraday, you can see right there at the open, we kissed it. And then we had this beautiful pullback. I said this was a day trading level. It was a good one, albeit it missed my level by a few pennies. But either way, you could see how this trend line here kept Coinbase under wraps. Circle just continues to rally higher. Really remarkable, guys. I have to say, this stock, again, it's a short-term IPO here, meaning that it's just been out for 2, 4, 6, 8, 10, 11 days. So basically under 3 weeks, this has been public. IPO'd at $31 a share. It opened for trading around 68, and it is now at $245 a share. Now, listen, a lot of people are chasing this. It's also getting squeezed by, it's basically getting short squeezed. I would just continue to say that, listen, as long it could go up further, it could see 275, it could see 300. At some point, it will also have a major reversal. and you just want to be careful here, all right? This, again, is up 600% now from its IPO price in basically 11 trading days. That is definitely not healthy. And it's one of these it's kind of these meme craze plays, right? So it'll go up until the music stops and then it will crater. So just be aware of that. Again, a lot of people look at this and say, wow, this is such a great mover. There's a lot of risk. Yes, it could go up. We don't know when it will stop, but when it stops, it will have a monumental correction in the chart. Speaking of which, take a look here. This is Palantir. I love these charts. I'm focusing today on many of the popular ones amongst retail. Look at this low to this low to this low. And then if we flip that around, look at the high of the parallel and look right there. And today, Palantir did pull back, guys. Again, not a big pullback overall, but again, the point being is look at that candle that went right up there, kissed that line, and then there you see a pullback right there coming into play. Another great chart here. Take a look. A lot of weakness, by the way, in the Magnificent Seven. We'll talk a little bit about the semis in just a second because the markets were rallying back early and kind of grinding up until we got some word on the semis, which I'll cover. But before we do that, Meta, again, lots of resistance here, rolling over. Nice little rollover today, almost 2% downside on Meta. And then look at Microsoft here, guys. Microsoft is in this very tight upsloping channel. If it breaks, watch out below. So again, it didn't break today, but it had a nice down day. But if this breaks this upsloping, you probably come almost straight down to about 460 and then potentially gap window right in this vicinity, which is also this area over here. So Microsoft is still holding in there. It's still in its uptrend. As you can clearly see, this channel is a tight channel, but it's clearly in an uptrend. Watch for the break here. That would signal further downside. All right, now let's flip over to the semis today. The SMH having a nice down day, only about 1%, but was down today. The key today was when we heard that there are going to be more restrictions on foreign companies getting these chips. And again, a few weeks ago, it was like, oh, well, maybe the restrictions will go away. Now it seems like more restrictions could be on the horizon. So we did see big reversals out there in names like NVIDIA. After being up early on the day, NVIDIA did turn around. Wasn't down a huge amount, but look at names like AMD. AMD was up trading around 133. It closed at 128, and this is a technical topping tail, which is a bearish reversal signal. So just keep an eye on that, folks. A bearish reversal signal there on AMD today. All right, last one I wanted to show you was CrowdStrike, another beautiful parallel or trend line. Look at the trend line right here. And look, it hit here, dropped on earnings, went all the way back up, kissed that line, and is now starting to curl over again. And again, these parallel channels or trend lines that mark the tops are unbelievably useful for us as traders. Now let's get into crypto, right? So Bitcoin, guys, today it's borderline breaking a key upsloping trend line. Look at the break right here. And again, we don't know where this will close because this closes later this evening, my time. But nonetheless, it is below that line. And I do want to just point out that historically, Bitcoin has been a stock market leading indicator. Why? Well, because it's slightly riskier in general in terms of volatility than the NASDAQ. So what we've noticed, if you go to 2017 or 2021, Bitcoin topped 4 to 6 weeks before the market really started to come down. And we're kind of approaching that, right? We're kind of in that near 4-week zone for Bitcoin since it made its last all-time high. If we start to see a breakdown on Bitcoin, not so much on Bitcoin, I mean, obviously that's bearish for Bitcoin, but I would be very aware of what it could signal for the stock market historically based on what we've seen in the past. So again, just another little tidbit there on Bitcoin there as we go through. Let's look at gold today. Gold did see initially some weakness. And then obviously once the chip news came out going into the weekend, gold rallied all the way back to basically close flat. But it was basically in de-risk mode. And then later on in the day, people bought gold right back up. So it floats back up on the charts. If silver came in here, you had this wedge pattern. It tried to break out. It did, in fact, never confirmed. And then it came in. I've marked X with my spot right here of where I would be a buyer. That would be a retrace to a former high pivot, breakout, retrace to the scene of the crime. That's my level where I am looking to potentially buy silver. Oil today, Oil was basically flat on the day, almost no movement today, was down a little early and then kind of came back to be flat to positive. Obviously, all eyes remain on the Middle East and Israel and Iran. And does that escalate and does it envelop more countries in the US? Obviously, that will determine it. But on a chart basis, I continue to believe that the high short term is in here on oil until proven otherwise. Now, listen, oil may pull back here and find a base and then bounce back up. But right now, this is the level to beat, right around $77 a barrel. Now, listen, if things in the Middle East get really, escalated, then yes, oil probably will go higher. But assuming things kind of stay as is, you have a short-term top there on oil. Lastly, natural gas. This was very cool on nat gas, guys. So again, we've talked about this line historically, right? Support, came down, broke, resistance, pushed down, resistance, chop, breaks up. Look at where it got rejected. Right back at that level. That's the power of charting, folks. And again, this is what an investor empowerment day is all about. Most investors rely on essentially emotion to make decisions. What do they really believe in? What's social media telling them? What's the mainstream media telling them? Where are they thinking that new hot play is that they're missing out on, right? I mean, this is all stuff that's probably going on with Circle right now as a stock where it keeps going up. But in reality, when you follow the charts, it doesn't mean you're a perfect investor or trader. I certainly am not. I have my fair share of losses. But am I able to win many more times than I lose by using charts and shutting down emotion? Heck yeah, I am. And that's really the whole point here, is that we can use the same tools very simply that institutions use to maximize our own gains and compete and actually beat them at their own game. Now, granted, we're not going to have billions or hundreds of billions of dollars like they do. That's not going to happen. But can we grow our 10K to 20K to 40K to 80K to 200K to $500,000 to $1 million over the course of many years? Absolutely, it's doable. But you got to shut down that emotion, and we got to go to the charts. And I think that's the key, guys, all about the charts. All right, on that note, folks, I want to play something for you as I leave today. But don't forget, Investor Empowerment Day on Monday. Can't wait to see you. Here it is.